Okay, so I actually just concluded this video, but bombshell headlines just came out that you need to see right away. And it's funny because throughout this video, I was like, someone knows something here. Markets are not up 2%, a little bit over that, for no reason, okay? Look what you have here just a couple of minutes ago. U.S. Treasury Secretary Bessent comments at JP Morgan's event in Washington. And look at what he says. He says, I'll just read the whole headline here. U.S. Treasury Secretary Bessent sees de-escalation with China and the situation as unsustainable. Why is this good news? Some people are going to say, you know, that unsustainable, that sounds like a bad word. Well, there's an old saying on Wall Street that goes like this. Wall Street will stop panicking when policymakers start panicking. This is the first sign from a policymaker in the Trump administration of panic, that we need to do something here. At the time of recording this video, all of your major indexes are up over 2% today. And here in this video, I will break down exactly what is causing markets to move higher today. The first thing I can tell you, which is pretty obvious, is markets are just beaten down. They've been through a lot. Like this headline here says the Dow Jones is currently on pace for its worst April since 1932. I mean, when you're that beaten down, it doesn't take a whole lot to send markets sharply higher. And here's another crazy one. The S&P 500's performance since Inauguration Day is now the worst for any president up to this point in data going back to 1928, according to Bespoke, with investments via the Wall Street Journal. We also heard that yesterday Trump's approval rating hit its lowest level ever in being president. That seems to maybe be something where people are like, hey, how long is Trump really going to do this with his approval rating tanking and some of these scary headlines? Now, I also think it's pretty fair to say that retail investors do not move this market. Who moves this market? Hedge funds, institutions, big firms. They move markets. And it's not unusual to get, big rallies before news comes out. It wouldn't surprise me, in other words, if there is good news coming, we just don't know of it exactly at this point. Like, for an example, Elon or Bill Gates or Bezos or Buffett, they probably are more connected to what's going on than you are. If there's something big coming, you may not know of it, but people with all the money probably do. Now, Citigroup's chief economist does not believe Trump will fire Fed Chief Powell. Quote, "This Rubicon will not be crossed." Because seriously, let's face it, if Trump were to fire Powell, the bond market would die. Yields would skyrocket, probably to 6 or 7% on a 10-year Treasury bond. That is not in Trump's best interest at this point. What's actually in Trump's best interest, if he really wants to drive down yields, is to cancel the trade war. Go back to business as usual, let the Fed focus on inflation, and with that, the Fed would be cutting rates right now. And your Treasury yields would probably be 3%, maybe less than that. And with that, the economy would be booming. Now, before we go any further with some of your other important headlines, I think this is also important. Take a listen to what Tom Lee said on CNBC. He says that we may have reached peak uncertainty, but not maximum pain.
As for the equity markets, you think stocks are attractive, but uncertainty is still the name of the game, and it's going to persist. Do you think the high in the VIX, what did you say that was on April 7th, that holds?
Yeah, I think it's going to be hard to match that level of fear again. So I think we're probably past peak uncertainty. I mean, even with this Fed controversy, but I don't know if we're past maximum pain. I think that there's still risk that the economic consequences are going to cause markets to be hesitant, but it's going to be hard to match that fear again. So I think a structural low did take place.
Which, in all fairness, I do think is pretty accurate. I think we have hit peak uncertainty, and Tom Lee's probably correct there, and I think today kind of highlights that. But there could still be pain if this uncertainty that we've already experienced feeds over into Main Street, into consumer spending behaviors and potential layoffs and things of that nature. Although I think you need to see like the tariffs actually go into effect to get meaningful layoffs. And people, they've been in a bad financial position for a long time, and they continue to spend money. So I think it's hard to make an argument of substantial further weakening in the consumer without layoffs. And right now, it doesn't seem like companies are super hard pressed to start laying people off. You're not hearing that, at least from the first rounds of earnings that we have already gotten. Now, GE's CEO today says that he discussed tariff policy with Trump. IMF chief economist says oil price declines are primarily from weakening global activity. The IMF chief economist also says that China is facing stronger deflationary forces as a result of trade tensions, which I think is something not a lot of people are talking about at all right now. But China, okay, they are a manufacturing machine. They cannot just turn that off. Okay, so they continue to manufacture. It's kind of like when oil went negative during COVID. All of a sudden, there was not very much travel taking place. Oil went negative. But the companies pumping oil had to keep pumping oil because it would cost way too much to stop. Like, you can't stop pumping oil, right? Imagine that. You can't stop the Chinese manufacturing economy. So what could happen over the next couple of months is you start to see a lot of excess inventory and a lot of deflationary pressures globally, not just in China, but globally. Citibank's chief economist puts recession odds at 40 to 45%. So again, people are bearish right now. People are negative on the economy. That's like 3-4 times higher than where they usually have recession odds at like 10%. 15% maybe in a rocky kind of year. So, you know, just the lack of bad news, which is kind of where we are today, could be part of the reason why markets are moving higher. Also being reported today, the gig economy is growing 3 times faster than the traditional workforce. Bank of America's CEO says their research team does not see rate cuts this year due to sticky inflation. And investors haven't been this bearish on the economy for 30 years, according to Bloomberg Intelligence. Trump says that he just spoke to Netanyahu relative to numerous subjects, including trade, Iran, etc. The call went very well. We are on the same side of every issue. Goldman Sachs is now predicting that gold will hit $3,700 an ounce by year end and may hit as high as $3,950 per ounce by year end. Now, the IMF today, the International Monetary Fund, slashes 2025 U.S. growth forecasts to 1.8% from 2.7%. Citing trade tensions. Okay, that sounds bad, but that is actually really good. 1.8% GDP when Citi has a 40 to 45% odds of a recession. That is far from recession in the IMF forecast today. Chevron's CEO says he sees no signs that the U.S. is close to a recession. Chevron CEO Mike Wirth said the oil major is not seeing any signs that a recession is imminent, but oil prices at $60 per barrel or lower will impact production in the Permian Basin, Wirth said. But he does say, quote, there are signs that growth may be slowing, and we have to always be prepared for that. Here on the day today, the CNN Fear and Greed Index is sitting at 24, which is still in extreme fear. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand in extreme fear. And junk bond demand in greed. We will get a new AI investor sentiment survey coming out on Thursday. The last one we had shows there's still over 2 times as many bears than bulls. Bears coming in at 56.9% and bulls coming in at 25.4%. Neutral investors climbed to 17.7%. This really just highlights to me again, with all of the other data that we've shared in this video, people are very bearish. And when people are this bearish and we don't really have bad trade headlines today, kind of got good news from the IMF growth forecast, earnings have been good, that can set you up for a rally in markets, in which I think that's what you're seeing today. And then, of course, let's not be confused. I think there's probably good news coming, okay? Most likely. And I think that's probably the real culprit of why markets are moving up 2% today, a large move for relatively no reason at all. I think someone out there somewhere already knows something is coming, whether that's an India trade deal or China is going to come to the negotiation table, or maybe that's already happened and we just don't know about it yet. Something is definitely taking place. That's my view. I don't really have much to back that up. But when you see weird moves in markets like this, usually there's a bigger reason for it that you just don't know yet. We will get a new Atlanta Fed GDP Now update on Thursday as well. Currently, the Q1 GDP is tracking negative 2.2%. If you exclude gold imports, you're negative 0.1%, which that doesn't happen on the headline GDP number once it's released. So there's a good chance Q1 GDP could be negative. Question is, like, do we get the layoffs that normally come with a recession? Is Q2 going to be negative? And that's to be determined. But again, here on the day today, the Dow is up 2.12%, S&P is up 2%, NASDAQ up 2.14%, Russell 2000 up 1.84%, and the VIX down 9% today. Look at the VIX, guys. It's at 31, almost at 31. You are still very elevated. For context, I mean, the VIX is at like the highs of any point you've seen in 2022. Still, after this 2% rally today. That's crazy when you put it into, recent historical context. Okay? You could see a good headline come out and fear really come down, because you are still very elevated in terms of how fearful people are. And I think the VIX also highlights how much of a short squeeze you could see on very little notice still. We've seen that with the 10.5% rally upon the positive delay of the tariffs. Okay, well, people are still really fearful. The VIX tells you there's a lot of bearish options and bearish positioning on our markets, and just look at what people are saying. They're very bearish out there. If we do get good news, people are going to have to flip-flop quickly. And that could mean an even sharper rally in markets. And that is kind of my expectation in the near term. I do think we will get good news. Could be why markets are moving higher today. There's not really another central catalyst or focal point you can point to say that makes sense why markets are up 2.5% now on the S&P. You don't have that today. So when you don't have that, usually there's something good coming. Now, we can, I guess, make an argument that earnings are coming in better than expected. Companies are actually giving guidance. They're not as concerned about the economy slowing down as Wall Street is. That's positive, but we haven't even got to the big earnings yet, like the big dogs. Today in after hours, the first big dog will report earnings. That is Tesla. You also have Intuitive Surgical, Enphase, SAP, Capital One, Baker Hughes, Weatherford, and Zurn. Tomorrow morning, you have Boeing, AT&T, Vertiv, Ethanol, Next Era Energy, Philip Morris International, Virtue Financial, and GE Veranova. Wednesday and after hours, you have O'Reilly Auto Parts, Alaska Airlines, IBM, ServiceNow, Chipotle, Century, Newmont, Texas Instruments, Lam Research, and Las Vegas Sands. Thursday, American Airlines, Nokia, Southwest, Merck, Pepsi, Valero, Union Pacific. And then in after hours, you have Intel, Alphabet, Celestica, T-Mobile, Boyd, and Val, as well as Skechers. And then Friday pre-market, you have SLB, AbbVie, Colgate, Phillips 66, Centene, and Charter. But it's really the following week that's going to be the big one. When you get Apple, you get Amazon, you start to really see what the effects of these tariffs could do on inflation, to the consumer, to the economy. I think those companies are going to give us a lot more clarity and detail, those two companies specifically, to kind of guide our expectations around tariff. So let me know your thoughts on all of this down below in the comments section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.